Forex Focus brought to you by IG. We have our good friend Paul Cappetta joining us to talk about a very volatile Forex market. Paul, some craziness going on, US dollar bullishness, but traders seem to be taking the contrarian approach. We're going to take a look at our IG client sentiment, proprietary data showing you where people with positions in Forex pairs, where they're positioned on the long or short side, but some pretty significant movement on the whole here. I mean, what pairs have you been looking at amid the volatility the last couple of weeks?
Yeah, sure. I mean, you hit on it earlier with the move in treasury rates has been basically strengthening the dollar across the board. That's where I've been maintaining my focus. There's a China trade you can play with Aussie dollar, but that's a little obscure. Just straight rates where U.S. rates are moving higher, so the dollar seems to be strengthening. Rates aren't moving higher and elsewhere. You got a little bit more of a dovish kind of central bankers out of some other places in Europe. They're dealing with a little bit slower of an economy than the U.S. is. So it's pretty much the dollar. But traders are taking, at least IG traders are taking a more contrarian approach to this. Obviously, the dollar's moved quite a bit, and then our good friend the yen has been taken back to the woodshed, and we're nearing those highs from last October.
Yeah, and you talk about that interest rate piece and a lot of the dollar strength, part of it feeling like it's on economic fear abroad and some relative economic strength here in the U.S., but that also correlates to our stronger interest rates than those places abroad. And yeah, yen being one of the most extreme cases here, close to 150 again, and just above 150 are the 30-year highs that this market saw in 2022, and also a 14% gain year to date. Has been pretty crazy. How do you tend to look at when you open up your platform and you see, okay, it's US dollar bullishness across the board? It's this almost a correlation of all the Forex markets, all the major currencies go to one. Do you tend to look for the biggest mover, or do you tend to go to the euro or one of the major markets with the greater hub of liquidity most of the time? What tends to be your go-to market for observing this dollar movement and potential opportunity out there?
Yeah, I like looking for the ones that are moving the most when the dollar is moving the most. So, for instance, like Aussie dollar moved 0.7% today, while dollar yen's maybe only up 0.3%. So that's something I look for, something that's moved a little bit more. You can sometimes get the kind of bounce back move, which is a lot of what the kind of contrarian thinking is to get the move's overdone, it's going to bounce back now. Doesn't always happen. It can keep going down basically for Aussie dollar, or for yen it can keep going up. There's no cap or floor to any of these currency pairs, so you always have to be aware of that. But I try to look for the one that's moved the most, what's moving of the major pairs typically, so you have that liquidity that you can lean into. But yeah, that's what I look for. What else is also what's happening on the calendar that week that could affect, that could be causing this move? Is it something, a more systematic change that maybe it's not going to bounce back? That also is something to take into account. Yeah,
it's been really interesting because they've almost been like doing a relay race of sorts. They're doing a really bad one against the US dollar, but it's almost like, okay, yen, you're going to have a really bad week. And then it's like, okay, euro, now you're going to have a really bad week. Australian dollar has kind of taken a break the last couple of weeks while they've just been hammering this euro, yen, and pound market, kind of the traditional major currencies there, whereas Aussie and Canada, those commodity currencies, they can be a little less correlated. But yeah, they've really been taking this yen to the woodshed. Interesting to see, amid this US dollar bullishness, Paul, 77% of IG clients with positions in the dollar yen market are on the short side of it, that contrarian view. And maybe you can speak a little bit to the fact that 3 out of 4 of these IG clients with positions in this market are shorted, and what they're maybe looking for, not necessarily in that hourly or daily chart where it's like man, this thing just goes up and to the right. But in a longer term basis, contrarians, when they see a price extreme like this, they're maybe looking for some mean reversion, right?
Yeah, exactly. You're looking for mean reversion. You're looking for a potential BOJ intervention. That's a tough trade. You never know what they're going to do, or if the market's going to take it or just kind of reject it. So that's a weird one. But yeah, no, you're looking for mean reversion. We're well at, we're over 20-year highs if we get above 150, right? That's extreme moves. What happens there? This is not one from my cup of tea. Basically, when it gets up this high, I'm always worried because if it breaks through 150, obviously it could reject it, could keep flying through, and it's an uncharted territory at that point, basically.
And yeah, we're going to do a little talking in a second on timing, because you look at a chart like this, or when I started out trading options, you look at that VIX chart and you immediately think, well, why don't I just buy it when it's low and sell it when it's high? Like, this is the easiest trade of all time, right? You look at a mean reverting market like that, not so easy, because that VIX can be high for a long time. It can be low for a long time. Same with this market here. Thankfully, when it ran up to 150, if you were a contrarian, if you were on the short side, it did come down within the next month or so. But yeah, it can, one, go anywhere, and two, it can stay up here as long as it wants. So you definitely don't want to over leverage at any one given price here, and you want to be careful. If you're a day trader or a swing trader, don't turn into a long-term trader because you're getting, selfish around one position here. And I wanted to run through some of the sentiment around the other major pairs because, Paul, it's pretty much short dollar across the board, except for traders still liking that long dollar against the Swiss franc, even as the dollar has bounced back against that Swiss franc in the last couple of months here. But what is this another case of you gravitate towards the extremes, looking at that Aussie 82% long Aussie short dollar in that pair under 64 cents? Or what catches your eye here? Is it the pound and euro now more than 70% long, where I feel like we were seeing 70% short client sentiment just a couple months ago in that market? Yeah.
If you look at this, you talk about extremes, right? Euro dollar was above 112 2-3 months ago, and we're now 700 points off that, right? And same thing with cable cable is pound dollar. Cable might have been, it was above 130 in July.
They've lost 1,000 pips, 10 cents.
Almost 1,000 pips in a couple of months. So you're talking about extremes. The move's quick. Obviously, it could bounce back. It doesn't have to. This is kind of the double-edged sword of the contrarian trade, is that it doesn't necessarily have to bounce back. It can go anywhere. It could trade sideways too, which is, people forget that does happen in FX markets where things just trade sideways. Aussie dollar's done that a bit this week. And last week, where it started to trade sideways, looks like they may have priced in some of that Chinese weakness. But the dollar Swiss franc one's actually interesting, because if you remember, dollar Swiss franc last year, I think it got all the way up to 95 at a point. But it's been on a tear. Yes, it did. Dollar Swiss franc actually last year was over parity at one point. So if we get back to that level, that's another 800 points it has to swing. So
And that's the interesting thing. Yen, not a lot of ground to cover to get to that 30-year extreme that we saw last year. But you talk about the, almost 1,000 pips lower in pound, euro off, 600, 700, 800 pips, depending on when you're looking at it over the course of the last couple of months. Dollar franc, and that Swiss franc is normally less volatile than these other markets, but that market got down below 88 and now is back close to 92. Still ground to cover with U.S. dollar upside. So keep that in mind if you are on the short side of that dollar. And I did want to bring up this Aussie piece. It is the extreme of these majors in terms of client sentiment. 82%, more than 4 out of 5 traders with positions in this market, Paul, are long Aussie, short USD. And a lot of this downside being seen from Australia, central bankers there pausing their interest rate hikes when at a certain point they looked like they were going to be really aggressive, and they've paused, and a lot of that coming from the close ties to China and Chinese economic data been some of the worst globally over the last couple of months. Something I want you to hit on quite quickly here, Paul, to conclude the show is that if you are buying this dip in Aussie dollar or selling that dollar against the yen at these historical extremes, keep in mind that timing is very meaningful, especially in high leverage markets. And yes, you might look at the fact that dollar yen got up to 150, came all the way back off below 140. Aussie got down to 62 cents, bounced all the way back up to 70 cents. It didn't have to stop at 62 cents. This market has been below 50 cents in the last decade or two here. Doesn't have to stop there. And then also, to your point, timing can really be a problem with the amount of leverage. And even if it just moves sideways and you're seeing small losses kind of build, that can get out of hand at a point, right?
Yeah, absolutely. I mean, if you're looking for this mean reversion trade, you have to obviously be aware that it could not mean revert right away. So you got to have the funds in your account to make sure you're having your margin requirement taken care of there, not going into any sort of margin call situation. It's definitely a risk there if you lever up your positions too much in your account. It's just something to be aware of. You should be aware of really any trade, but with these mean reverting trades, you have to, if you want to take it for the swing trade or a little bit longer term of a trade, you have to be able to take some short-term pain if you think it's going to mean revert fully. Again, doesn't have to mean revert. There's nothing that's like a law that says it has to mean revert at all.
Yeah, this is all historical. It's
exactly.
Not a requirement.
Mm-hmm.
But yeah, great points there as always, Paul.